But let's get another company then. We're joined currently by Mr. Upinder Zutshi, the MD and CEO of Infinite Computer Solutions, who joins us on the phone line. Hi Upinder, thanks so much for joining in this morning. Numbers, it wasn't anything really to write home about. There was a bit of a dip on the top line in terms of a sequential basis. For the rest of this fiscal, what kind of revenues are you targeting? Will it be a growth? What kind of percentage are we looking at?
Good morning. As far as the year is concerned, at the start of last quarter, we had said that based on the visibility that we have at that point in time, we should be growing about 10 to 12%.
Okay.
As far as revenue is concerned, and we also expect our margins, operating margins, to grow on the absolute terms by about 10 to 15%. So that's the guidance that we have given at the start of the year. And after the first quarter, we believe we're in line with what we said at that point in time.
All right. Margins, you're saying it's going to, your operating profit will grow by 10 to 15%. But in terms of a targeted margins, I think you've been in that band of around 8.4 to around 8.8%. What exactly is the targeted margins for this year?
We're looking at, obviously, if you see what we've been doing for the last 3 years, essentially we have been transforming the company from a services orientation to more of a product and platform-based company.
Right.
So that has been going on, and our eventual target margin, operating margin target, is about 15 to 16%. So that's what our goal is. However, we're still far from that, and we're gradually and surely moving towards that objective. As far as this year is concerned, we would see a couple of percentage points increase in the margin over the last year.
Oh, all right. So where's that going to come from? But do you have pricing power? I was just looking at your billing rates. I think for your onshore billing rates, that's been more or less stable if I take a look at it on a sequential basis. Though offshore, right, I think there's a dip of close to around 8 to 10%.
It's more than the onsite and offshore. I think our business is really, and the margins are coming from if the contribution of the business that comes from products and platform goes up. So that's especially in the mobility and messaging space, where we have a lot of products that we have launched. Significant number of platforms have been built, and if you look at this quarter, we've added about 20 new clients.
Oh, okay.
So most of the bottom line growth is going to come from if we manage to scale these clients up and manage to sell more of the mobility and messaging business or products.
Right.
And the revenue growth is going to come from the other two businesses that we have, which is the classic IT services and product engineering services.
Right. So, Upinder, you're saying that you've added more number of clients. I was just going to ask you, because I think your top 10 clients, they contribute more than 92% of your total revenue. So are you looking at, diversifying a tad bit more, reducing the dependence on the top 10 clients?
Obviously, that's our long-term goal, but our top 10 clients are so big, to change that equation is going to take a long time. But we are moving towards that, and if you look at the total number of clients that we have, that we had 2 years back, and what we have today is almost double.
Right.
But the contribution from some of these newer clients are not really showing up on the radar, because compared to the top 10 clients who are very big, 20 million, 40 million, 100 million plus. So that's taking time, because what's also happening, if you look at the industry, the nature of the business has changed. I mean, we're now talking about more of small revenue value contracts, but high margin value contracts. So we're not really looking at very large number of people supporting infrastructure. So these are $1 million, $2 million clients. So it's going to take a time to change that equation as far as the top 10 clients are concerned. But I look at it as a big advantage, because those 10 clients are giving me that stability on which we will try to build higher value businesses.
All right, Upinder, before we let you go, something that's also excited the street is with regard to your buyback. So I believe you're going to spend around 150 crores or thereabouts on this buyback. What's the current cash in your books? I think you'll be participating in this buyback. So post this buyback, what are your cash going to look like?
See, at the start of the year, we had about, at the end of this quarter, we have about 300 crores in cash.
Right.
And every year, if you look at last year, we generated about 125 crores of free cash.
Right.
And we expect to do the same thing this year. So based on that, the board took a decision to recommend to the shareholders a buyback of 150 crores at 250 rupees to essentially, return value to the long-term shareholders that we've been having. And after the buyback, obviously, it will be 150 crores, which is left out of the 300, and plus whatever cash we generate in the next 3 quarters.
All right. Thanks so much, Upinder, for joining in. All the best for the remaining
Thank you very much.
For the remaining of this fiscal. So that's the management sounding quite confident. Top line growth of 10 to 12%. They've added more clients. They're looking at, not focusing only on the top 10 clients. There was too much of concentration of the revenues, more than 92% coming in from just 10 clients, and the buyback supporting the stock as we speak. But the Nifty has come off the high point of the day, so just keep your eye out on that.